gentlemen, Kei Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is up 0.8% on the S&P. Same with the NASDAQ. Semiconductor did a little better today. However, we got Dow, Russell 2000 up about 0.5% each. Transport's negative today. Banks up 1%. Energy 1.1%. Biotech up 1%, along with the healthcare 1.3%. Looks like healthcare and the emerging market led the entire market today. Those two are the leaders for the day today. Home builders down today, 0.2% negative. Utilities up 1.2%. Retail's down 1.4%, 0.5% there. I know retail made a big move yesterday. Looks like taking a breather today. Bitcoin up 7% today. Gold, silver, miners up. Notably, silver's up close to 2% today. Dollar is negative there. We got oil up about 1%. Treasury bond down 1.3%. And looks like VIX is down about 3% today. Let's do with S&P 500 ETF. Spider, 65-minute chart here. So looks like we saw another gap up today. This is where we closed yesterday, right? And then we gapped up today, and that's the first hour, second hour, third hour, fourth and fifth. Little bit of flagging, and on the last hour, looks like on the sixth hour, we saw another push here. We're seeing this bullish rallies in the last 3-4 trading sessions here. So it looks like right there, right? This is where we bottomed here about 431 back in October 13. I mean, there's another low, but this is the low for the October, I believe. Actually, no, this is a low, October 4th right here. That was the low. That was the bottom where we saw that lowest print in the month of October. And that was after we seen that 6% decline on the S&P 500 since we, peaked out early September, so about 6% correction, right? It was trading about 450 or so, came down to about 425, 426, and some zigzagging action there, but crucial higher lows, which we've been talking about last couple weeks. And then you can see right there, and that's that first the first day of the rally, second day gap up, third day rally continuation, fourth day rally, and fifth. So 5 trading sessions of rallies you can see here, and almost every single day the market gapped up and held this gap. You can see this is a nice, rather sizable gap here. We're going to categorize and label this gap as a breakaway gap, continuation gap, and not to mention on the second gap right here, this was a crucial gap up because this was the time when price reclaimed my midterm moving average. That midterm moving average been tamed. Now it is supporting the buyers, right? And that's what happened right here, jumping over the fence action. You can see even today's move, with today's move right here, my midterm and short-term moving average having a little reunion there. It's been a while since they came across, meeting together. Last time when they did see that cross the downside, that was right here, right? And then you can see ever since then, things were a bit difficult. And I guess hectic is a better word because we really didn't see like a down market or downtrend per se, but it was really more of a basing period, right? More like a reversal or a bottoming process, consolidational type of move that we saw in that vicinity right here once we saw that cross. So things did get difficult, hectic for the buyers. It was trendless for entire month of September and October. You can see right there, that's what we call a death cross. And then this is what is known as a golden cross. The trend has been shifted, and we're back to bullishness. And we established all of this, earlier this week and late last week that, something like this is going to happen. And we also talked about how quickly, buyers are, we talked about last week how slowly buyers are gaining that momentum, gaining that confidence. But we talked about how quickly buyers are going to start to regain that momentum and start to really go after that all-time high level. if the bears are not able to hold some of this level, and I think the crucial level was right in that, well, that's why that gap was a crucial gap. Remember that midterm moving average. Last time when bulls trying to fight that midterm moving average, we saw the tankage there. This time bulls were like, you know what, I'm not gonna fight that. We saw gap. And ever since then, we see a nice rally here. So it's about 5 days of rallies here with the gap ups, breakaway gap, continuation gap, another continuation. And all of these gaps are still open. This gap's open, this gap's open, this gap's open. We got a golden cross there. And so we want to continue to give benefit of the doubt to the buyers. Looking at the levels here quickly, in the micro term, should there be any kind of slide going into tomorrow, remainder this week, 448 is going to be the micro term support. That's where we gapped up. You know, that's the level that where we gapped up today. So that's the 448. And it's better, obviously, if bulls can protect this gap, make sure this gap doesn't get breached, doesn't get filled. As long as we can sustain, bulls can sustain this gap, it will be no problem. The bulls will get up here and definitely fill this gap. And this gap gave a lot of problem because that's when things got really difficult for a while. But bulls regained that control, tamed all these moving averages to support the buyers once again. And looks like bulls are going after this gap, and ultimately it's going to go after new all-time highs and gap back to its primary term uptrend. Let's check out that oscillator and see if we can extract any more information. So yesterday we talked about how the market, this is a good thing. Do you remember we talked about that? If you've been watching my videos this week and last week, pushing it all the way to the top of its band is a good thing. Not a bad thing. It's a good thing. We talked about that yesterday. Remember right here, you see that red line? Oscillator did not go all the way to the top of its band. Bulls did not push it all the way to the top of its band. Did not push it all the way to the top right here, right here. Remember, there's a little space here. There's a little space there. What happened? Tanked. What happened? Tanked. What happened here? Something changed. What happened here? Bulls pushed that all the way to the top of his band, flexing his muscle. That's what the buyers really doing at this time, flexing his muscle. Buyers knew that it got above this midterm moving average and was holding above it. And it was no use that we did see a gap on an opening day, a couple days ago. It was no use. We were already above the midterm moving average. The gap was remaining open. We already pushed it all the way to the top, little pullback, push it right back up, and you can see how much of a strength there is, how much of a traction buyers getting right now, and bears are pretty much getting decimated at this point because the trend has already shifted. Especially we're already dealing with a long-term, midterm, bullish uptrend, and these kind of stuff happens when you're dealing with a prolonged uptrend. Most futile thing you're going to do is you're going to try to call top. You're going to try to prepare some big corrections. Those people always have a very, very difficult time in the market, and you will let this market bully you around and manipulate you and chew you up into million pieces and just throw you out. And I'm saying this because that's what this market is capable of if you don't honor and respect this trend, this raging bull market we've been in since the COVID low. So the oscillator, it's still kind of sideways here, and there isn't a whole lot we can say much about that. Is there some kind of bearish divergence? Maybe. That's probably just nitpicking. Either this is a divergence or not. Market can keep pushing. Market can keep grinding higher. But, at this point, it is, looking at things 65-minute last 4 or 5 days. Are we extended? Yes, we are extended. And so there could be some kind of slide. I've given you some of the levels. And the oscillator, when oscillator is at this state, we got to continue to give benefit of the doubt. This could pretty much do this for all we know. Can do that for entire week or so. And this can keep putting in these micro-term higher lows and push higher, right? So we want to continue to, give benefit of the doubt to the buyers in the short term, mid-term, and long term. And when I say benefit of the doubt goes to the buyers, it does not mean that we're not going to see a pullback or decline or shenanigans along the way when the buyers are marching higher. It will see some pullbacks, and that happens. The market is not going to go straight up every single day. So when we do see those pullbacks, you want to understand levels, and that's likely some of these levels will act as support before bouncing back up. I'll come back for you Enjoy your evening and good luck trading tomorrow.